Welcome to the deep dive. This week, we're really plunging headfirst into the blockchain and crypto world. It moves so fast, doesn't it?
It really does. Blink and you miss something major.
Exactly. And this past week, August 12th to the 18th, 2025, felt particularly packed. Just a concentrated blast of significant stuff you need to know about.
Yeah, a lot happened.
We've spent time going through, a stack of trusted English language publications, market analyses, regulatory deep dives, the whole lot to pull out the clearest insights for you.
Mm.
Our mission today really is to cut through all that noise, find those essential nuggets, and connect the dots so you, our listener, can get quickly up to speed, not just informed, but well-informed.
Understanding the why behind the what.
Precisely. Why it matters, what it signals for, well, the future of finance and tech. You'll see some big themes emerge pretty quickly.
Like the institutional money surge.
Definitely that. Also, key shifts in regulation globally and some big market moves and accountability stories, too.
It's quite the mix.
It is. So grab a coffee, maybe settle in. We're about to unpack this fascinating week. We found some truly eye-opening things that show just how fast this whole space is maturing. Get ready for some aha moments, I think.
Absolutely. And what we're seeing isn't just, numbers on a screen. It's this powerful convergence, tech advancement, policy evolving, and a real fundamental shift in how the big financial players see digital assets.
It's not just crypto going mainstream anymore.
I'd say it's crypto reshaping the mainstream now.
That's a great way to put it. Okay, reshaping the mainstream. Let's start where lots of people focus the markets. Ethereum, Ether, had an absolutely incredible run.
Yeah, that caught everyone's eye.
It wasn't just a little bump. It soared past its 2021 all-time high. What was it? $4,945.60.
That's the number, pushing market cap towards $600 billion.
Just astonishing. So when we see that kind of jump, what's really driving it this time? Is it different from past peaks?
Well, a huge piece is that growing institutional confidence we mentioned. It's palpable. It validates crypto's place in, let's say, more traditional portfolios. But what's really insightful, I think, isn't just that they're buying, it's the structure of these new ETFs.
Yeah.
They actually insulate the big players from some of the operational headaches and even reputational risks that kept them hesitant before.
So it's not just access, it's easier, safer access.
Exactly. It's a kind of de-risking mechanism for traditional finance. And that changes the game for long-term sustainability. It suggests Ether is seen less as just a gamble now and more like a strategic, diverse asset.
That structural de-risking, yeah, that makes a lot of sense for institutions. And speaking of institutions, one name just keeps popping up, huge name, BlackRock.
Always.
They've now accumulated over $100 billion in crypto assets.
100 billion.
And yeah, like you said, mostly Bitcoin. That figure, $100 billion, it's almost hard to wrap your head around that level of commitment.
It is. And the significance there, it goes beyond just the market size number.
Yeah.
It's a powerful signal of a strategic long-term shift in how diversified institutional portfolios might be built from now on.
Okay, so not just a side bet.
No, not at all. It shows they're actively reshaping their core strategies. They're anticipating a future where digital assets are, a cornerstone, not just some alternative thing on the fringes. They're basically future-proofing their offerings.
And that pressure forces others to follow, presumably?
It definitely influences the herd, yes.
Right. Okay, but it's not only about Bitcoin and Ether. Stablecoins are also making huge moves, both in growth and strategic innovation. Circle, they issue USDC, reported a massive 53% year-on-year revenue jump in Q2.
53% is significant growth.
And their circulating USDC supply keeps climbing. It went from about $61 billion end of June to over $65 billion by August 10th.
Wow.
And they're not stopping there. They announced plans for their own blockchain called ARC, specifically for payments and capital markets. That sounds like a big step.
Oh, it's huge. This sustained growth in stablecoins, plus Circle's plan for dedicated infrastructure like ARC, it signals a really profound shift coming in digital payments and financial services.
How so?
Well, Circle's performance shows this growing, urgent demand for digital dollars that are stable, but also have that blockchain efficiency. And the ARC blockchain part is key. It suggests a move towards building specialized, probably permissioned, systems for specific, high-value financial uses.
Rather than just general public blockchain.
Exactly. This could seriously boost speed, cut costs, and help with regulatory compliance for businesses, for institutions. It hints at a future where stablecoins are just, part of the global financial plumbing, making cross-border stuff almost instant.
So stablecoins evolving into foundational infrastructure, not just trading tools.
Precise.
And naturally, when you see that kind of innovation, that scale, it brings up the regulatory questions. Where are the guardrails?
Always the question.
Which leads us right into the regulatory landscape. It's constantly evolving. The industry is pushing for clarity, often because the tech is so different. We saw leading DeFi figures, including a 16Z's crypto, urging the SEC for a regulatory safe harbor.
Right, specifically for non-custodial, non-discretionary DeFi apps.
Their goal seems pretty clear. Let innovation happen without crushing it under legal risk straight away.
And the critical thing here is that direct call for a tailored approach. Recognizing DeFi isn't TradFi. Traditional rules often just don't fit these decentralized automated protocols that lack intermediaries.
So a safe harbor gives them breathing room.
Exactly. Breathing room. A period for genuinely innovative projects to develop, to mature, without immediate, possibly suffocating regulation. It's a bridge, really, between brand new tech and eventual proper oversight. It seems quite pragmatic, allowing careful experiments within certain boundaries.
It makes sense. And it's not just the industry asking for new approaches. The Federal Reserve itself is adjusting how it looks at crypto.
Oh, yeah.
They decided to retire their Novel Activity Oversight Program. You know, the one focused on monitoring crypto and fintech exposure in banks.
Right, I remember that.
And instead, they're going to integrate that monitoring into their standard supervisory channels. Just normal supervision.
Now, that is interesting. Looking at the bigger picture, integrating crypto oversight into standard channels, that's a huge signal of maturation from the central bank's perspective.
How so?
It means they're moving it from the experimental or novel bucket into, well, just part of routine financial supervision. It tells us the Fed isn't seeing crypto as some isolated fringe thing anymore.
Okay.
It's something that needs understanding and management within the existing risk frameworks, liquidity, operational resilience, just like any other asset class. It's a big step towards crypto being treated as maybe a conventional part of the system.
That shift in perception really matters, and sort of related but more personal, there was even talk about Fed employees holding crypto.
Really?
Holding it themselves.
Yeah. Federal Reserve Vice Chair Michelle Bowman signaled support for allowing central bank staff to hold small amounts.
Huh. What was the reasoning?
To enhance regulatory and market understanding. Basically, learn by doing. Get that experiential perspective. That raises a really important question, doesn't it? How can regulators truly get a grip on a complex, evolving market without some kind of direct engagement?
Right. First-hand experience.
It speaks to a very practical way to gain knowledge inside these bodies. Letting staff hold small amounts could give invaluable insights into the practicalities, the risks, the user experience. Imagine reading a report versus actually using a DeFi platform, even for a tiny transaction.
Big difference.
That kind of first-hand feel could lead to more effective, more nuanced policy, balancing conflicts of interest, obviously, but meeting the real need for informed regulation.
It's a fascinating idea, bridging theory and practice. Okay, let's shift focus beyond the U.S. Other countries are making big moves too, especially with stablecoins. Japan, for instance.
Always interesting to watch Japan.
They just approved their first yen-backed stablecoin. A startup called JPYC got the green light. And get this, it'll be redeemable for government bonds.
Wow, backed by JGBs.
Yeah, aimed at both domestic and overseas use.
Okay, what really stands out there is Japan taking such a decisive step. Integrating digital assets right into their core financial infrastructure, using government bonds. That's not just an approval. It could absolutely set a precedent.
How so?
For other nations looking to blend traditional sovereign finance with digital asset efficiency. Using stable government bonds as collateral gives this incredibly high degree of trust and stability. That's crucial for broad adoption, domestically and internationally. It shows a real national strategy to embrace digital currency, but with strong controls, using secure existing instruments.
Anchoring it to existing stability. Interesting. But not all the global news is purely about positive adoption. Sometimes it's enforcement, control, illicit activities are still a concern.
Unfortunately, yes.
The UK, for example, imposed sanctions on some Russian-linked crypto networks, including apparently a Kyrgyz stablecoin used for dodging sanctions.
Right, part of that broader geopolitical digital asset scrutiny. And this really brings up that dual nature of crypto again. Huge potential for liberation, innovation, but also, yes, for illicit use. It just underscores the global challenge of enforcing financial rules in a decentralized world.
That's tricky.
And while crypto offers amazing transparency on the ledger for those who can analyze it, bad actors are always trying to hide. These sanctions show governments are getting much better at tracking and identifying misuse. It makes it clear crypto isn't some untraceable Wild West.
No escape route.
It's a constant cat-and-mouse game, really, and it's evolving fast.
Yeah, and it highlights that even with decentralization, accountability is still crucial. Which brings us to the flip side of all the growth dealing with past failures. Accountability is a massive theme.
Needs to be.
And a major headline this week really hammers that home. Kwon, founder of Terraform Labs.
Ah, yes.
He's reportedly preparing to plead guilty to U.S. charges linked to that massive $40 billion collapse of Terra USD and Luna.
That's huge news. And it's not just a legal headline, is it? It's a critical moment for market integrity, for investor confidence, maybe even more importantly.
Right.
It sends this really strong, clear signal about accountability. The Terra Luna collapse was just seismic. It shook trust everywhere, hurt so many people.
Absolutely devastating for many.
So these legal proceedings, Kwon's potential plea, they show that regardless of how decentralized the tech is, the people behind these projects aren't immune if there are allegations of fraud or mismanagement. It's a vital step, maybe a painful one, towards better investor protection, and just a stark reminder of the human element behind all these billions.
Yeah, that really drives home that trust and accountability fundamentals still apply, no matter how futuristic the tech. Okay, finally, let's wrap up with a strategic move from a big stablecoin player. Ties back nicely to regulation. Tether.
Yeah, what are they up to?
They've appointed Bo Hines, a former White House crypto policy executive, as a strategic advisor.
Oh, interesting hire.
Clearly aimed at helping their U.S. expansion and, crucially, strengthening their engagement with policymakers.
That's fascinating. What we're seeing there is Tether making a serious strategic investment in policy expertise.
Playing the inside game?
You could say that.
Yeah.
If you connect it to the bigger picture, it just shows how increasingly vital, maybe even essential, proactive lobbying and direct engagement with regulators are becoming, especially for firms wanting to grow and operate globally.
Makes sense. As rules get clearer, you want a seat at the table.
Exactly. As the landscape solidifies, becomes more complex, companies see that shaping policy proactively is better than just reacting to rulings after the fact. Hiring someone with White House experience. That brings in valuable insight, access, credibility. It positions Tether to better navigate, maybe even influence, the rules for stablecoins in key markets like the U.S.
They're playing the long game on policy.
Definitely looks like it.
So, wrapping this all up, what does it mean for you, our listener? It's been quite a week. Innovation, huge institutional adoption, complex regulatory moves, all jostling on the global stage.
A real mix.
Yeah, from Ether hitting highs thanks to institutional de-risking, BlackRock's massive bet, to DeFi asking for safe harbors, and the Fed integrating crypto oversight. The industry is maturing incredibly fast. Almost unbelievably fast.
And globally, too, Japan's yen stablecoin, the UK sanctions.
Right. And figures like Kwon facing real consequences.
It's really clear now, digital assets aren't just a niche tech topic anymore. They are deeply, irrevocably tangled up with global finance, geopolitics, regulation. They impact everything from national economies to your own investment thinking.
Yeah, understanding these developments, even the nuanced ones, is just crucial if you want to grasp where finance and tech are heading. It's way beyond just token prices.
Much bigger picture.
Indeed. It really is about much more than just crypto itself. So maybe something to think about this week. As digital assets get more and more intertwined with traditional finance, with geopolitical realities, how will that tension play out? The tension between open, decentralized innovation and the fundamental need for regulated stability.
Good question.
Will decentralization ultimately bend to centralized oversight? Or will we find some new kind of dynamic balance? It's a profound question, really, and one we'll definitely keep exploring in future deep dives right here. Thanks for joining us.